Joel Pruis with Cornerstone Advisors, Senior Director. No, I'm not the Toyota, but the Avis agent about fell out of her booth when she saw my name, Pruis, and I was actually renting a Prius. So anyways, we deal with it. I'm with Cornerstone Advisors. Cornerstone is based out of Scottsdale, Arizona. We've been around since 2002. Have 40 plus consultants covering basically every area within financial institutions. And as Ashley described, we actually do label some of our channels directly based upon how things are siloed within the banking. So it kind of gives it more relatability to the financial institutions. At the same time, we want to make sure that we are getting rid of those silos themselves. Kind of the public-facing portion of Cornerstone is in three parts. One is we have our newsletter called Gonzo Banker, kind of our alter ego that we have that takes somewhat of an irreverent look at banking, banking practices, even vendors a little bit sometimes, as we talk about some of those practices. Second is really around our Cornerstone study. We publish an annual study alternating between banks and credit unions with market or with industry benchmarks and metrics that really provide some performance assessments for our clients. And the third is around some of the market research that we do through surveys, sponsored research papers, et cetera. And it's one of those that I actually would like to reference here. And that is in the fourth quarter of 2017, we surveyed a number of bank executives in community banks, asset sizes ranging from 1 to 20 billion, and asked them what are their top growth priorities for 2018. And for the second year running, commercial lending and commercial loans is the top growth priority. Yay, I'm glad. I'm a commercial boy myself. So at the same time, we asked those same executives, now let's look internally and see what are your top cost savings or your efficiency initiatives that you're going to undertake in 2018. And almost 100% of them said that they are looking to streamline workflows across the organization. So the question I have to ask is that, well, top priority is we are going to streamline our workflows, but at the same time, we want to be dramatically growing our commercial loan portfolios. So maybe it's a situation where, okay, commercial is really not that broken, and we just have to tweak it a little bit. Well, we actually added another survey that we had done and talked about future ready. How future ready are the financial institutions across the organization? How ready are they to face the challenges, kind of address this digital transformation that they're looking at, that we have to all undertake? And when we look at the commercial lending area, it was only 1 out of 4 felt that they were even somewhat future ready at this time. So 75% are not even considering themselves to be somewhat future ready. And in fact, when we look at this, almost 1 out of every 3 feel that they are not at all future ready or are even falling behind the competition. So now this is describing the picture that we're seeing of it's not just this narrow gap when we're trying to streamline workflow as well as just get ourselves prepped for the future in commercial. It looks like we've got quite a big gap that we have to overcome. So now we've got a monumental challenge of continuing to grow the commercial portfolio and at the same time streamline the workflow. So why is this the case though with financial institutions? And it may be kind of Mr. Obvious here, but let's take through a 30-year history lesson. And we're going to go back to the time in 1987 when, yes, I was a commercial credit analyst at Michigan National Bank in Grand Rapids, Michigan. And here are the tools that I had at my disposal. Now, I've taken the liberty of using Word and Excel here, but the reality is it was 2 word processing stations that we had and 3 IBM XTs with the 5¼ floppy drives that we loaded our Lotus 123 spreadsheets on for financial statement spreading. We had our paper credit files. We loved paper back then, obviously, still do it sometimes. And our paper collateral files. And you know, that credit file, we were very creative in how we used that paper credit file. Because as we were prepping the next approval request for that same client, we'd take that old approval, throw it through the copier, and physically cut and paste narratives from the old onto a blank piece of paper and then set it back on the copier so that we could make our new presentation. Heaven forbid you made too many copies of a copy of a copy and it became blurry. Now I got to retype the whole thing. We also had a doc prep platform at that time. And so, obviously no integration back in 1987, but we could enter the data from the approval and then render our docs internally. So let's now go and kind of catch up to 2018. And what am I typically finding exists within financial institutions across the country? The technology that we've added is really, we've looked at, most all of us have some type of statement spreading platform. We've got our loan pricing platform. We've got a database that's capturing our doc exceptions and our financial statement ticklers. We've created those ad hoc databases that we need to capture information because we don't have any other solution to capture that. And we've come up with those wonderful shared network folders so that we all have one place to put all the documents that we're collecting from our clients. Trouble is, we're normally finding that there's no standardized type naming convention that we're seeing there, so no one knows exactly what that file actually represents. Or we've scanned everything into a single file, and now I got to scroll through 100 pages of documents that are in a single PDF. Our third-party providers have actually opened themselves up on the web. We can access our certificate of existence, UCC filings, order appraisals, those types of things. So we've generated all this in the hopes that as each one of the individual departments in commercial made their decisions, and in the hope that we would actually be creating the desire that we create this grand estate that we call commercial. And the results that we actually got is we built this. It's one of my favorite slides that I got out here. So yes, we have this hodgepodge of mobile homes that each one was just, supposedly this grand platform of automation that we were doing in commercial lending. And, we need to get information from one to the other, so we'll just build stairs between each one of them and plunk them down in between. Obviously, this is not what we wanted to have. So we still want to have that full grand estate that we had, but the results that we've generated here is that we have multiple single-purpose platforms. So they address that one specific area of functionality that we needed, and the individual department that made the decision for that platform made a good decision with the blinders on that that's the one that we need. But those individual platforms create those lack of data connectivity, no data sharing, no aggregation of data, so we get that proverbial redundant data entry, generating the process inefficiencies that we see. And it's actually, it's not that we've created worse processes, we just really haven't made any kind of significant improvement in the commercial lending process over the last 30 years. And then when you look at it from a regulatory standpoint or even your credit admin standpoint, because we've got all these disparate systems across the board, we have no real insight into the portfolios themselves. There's no connection of the origination data, the underwriting data, to the actual payment performance that we've seen in the portfolio itself. So with that being the result, obviously we still want the grand estate. We still want a platform, and many of you have the NewGen platform for your commercial LOS. But either if you, talking to the choir here, have that, have you fully developed that grand estate, or is it still kind of in the construction phase right now? For the rest of the industry, 75% of the industry that feels like they're not at even somewhat future ready, they're still in that hodgepodge of mobile home stage. And we have to transform ourselves from that into that grand estate. And obviously the solution here is getting an LOS, just like a NewGen platform itself, that can help us then to create this. And I think it's really over the last 5, maybe a little over 5 years, that the platforms have actually come to maturity at the level that it actually can support and drive performance enhancement within the financial institutions themselves. So as we look at this type of transformation that we have to undertake, We have to really start to create this business case. And I'm going to take the liberty of using the Moneyball story as my kind of backdrop for this. How many people have either read the book or seen the movie Moneyball? It's a great movie. My wife wishes I actually read the book. I keep telling her as a consultant I'm geared towards efficiency and streamlined processes, and movies are a much more streamlined way to read a book, in my opinion. But that's just my opinion itself. So let's take a look and kind of refer to kind of an early scene within the movie at Moneyball. I'm going to keep referring to the movie, not the story itself, okay? But it's Billy Beane. He's in front of the owner of the Oakland A's, and he's asking for more money. Why? They lost 3 key players on their roster after making it to the playoffs the year before, and he wants more money so that he can pay higher salaries and get better players, which then should result in more wins, and they get back to the playoffs. Sounds pretty logical. The reality is that this type of an action is not a guarantee of any type of results. And that's many times what we in commercial lending do, is that we ask, hey, you know what? We got to improve our performance, so give me an LOS. Let me buy one, implement it, but the actual result is that we go from our pre-LOS performance, implement, and then our post-LOS performance is just that we've reduced our profitability. And now every year I got to go in front of the CEO or CFO and say, and explain to them why they're writing a 6-7 figure plus check every year for a platform that is actually detracted from performance itself. And we can't do that. That's that Moneyball, that traditional thinking in baseball. It's our kind of traditional thinking that we've gone through in commercial lending. And the reason is that we tend to rely more on the intuition. So we use the buzzwords. Similar to the way that the traditional talent scouts in Moneyball, great scene in the movie when the talent scouts are talking about the players that they want to use to replace those 3 that they lost. And they're talking about things such as, you know, when his bat connects with the ball, it just sends it sailing. Well, guess what? At 10 years old, when I was in midget league, and I sucked at baseball, when my bat actually hit the ball, and it was totally by accident, yeah, it sent the ball sailing. But it didn't mean I was a good baseball player. In the same respect, we go through and we tend to use these buzzwords, and I've seen it from time to time, of, hey, we need a system because we have to reduce redundant data entry. Okay, but what's that going to do? What performance metric are you targeting with that reduction of redundant data entry that's going to actually generate results? Or, you know, are we okay to live with that type of redundant data entry right now? Or the classic, hey, with a system, if I can get the RMs to produce just 1 more loan per year, look at what's going to happen to our outstandings. Well, why does an LOS suddenly prompt there to be a higher level of production, or get that lender to make 1 more call, or get out there and actually get to approve 1 more loan? Or we waste so much time doing X. You fill in the blank for that. Well, you know what? Just don't do it. If it's a waste of time, it's a non-value activity, so let's drop it. And LOS is not necessarily going to be the impetus for you to get rid of that particular activity. The idea here is that we, as similar in the movie, need to come up with our on-base percentage. In the movie, Peter Brand boils it down to that one metric when they're going through and trying to select a player. They looked at the player's on-base percentage, with the idea that if the Oakland A's get on base at a higher percentage than their opponents, they have more opportunity to score more runs. They score more runs, they win the game. Kind of makes a lot of sense. And it boils down into a number that it doesn't care how you get on base. Whether it's a home run, a single, a walk, get hit by a pitch, just get on base. And we have the opportunity to win. And we've got to figure out for banking and for commercial lending, what is that on-base percentage number that's going to drive the performance that we want to see, that's then going to ultimately then pay for this LOS and improve our overall performance. So when we look at this, we can look at it from all right, let's define capacity for our commercial lenders. And what do we have to do to create more capacity for each one of the individual lenders? One common situation that we're seeing across the industry right now is that the lenders are actually doing a lot of credit analyst type activities, detailed number crunching that it used to be handled by a credit analyst. I did that back in 1987, and somehow it's just kind of gone away, and the lenders are handling more of that. But if we offload that responsibility and put it back onto the credit analyst, that then creates more time for that lender to be spending out in front of customers and generating more business. Now, I just spoke a couple slides ago, hey, if they can produce one more loan, maybe we can pay for it. And I said that that was just a bad idea. Well, the notion here is if we're looking at growth projections for our portfolio, we typically can create capacity that says, I don't have to add another headcount in commercial lenders, and I should be able to grow the portfolio at 8-10% clip for the next 5 years and not have to add a single person as far as lenders go. If I don't realize that growth, then I run into the situation of maybe I do have to adjust my head count. But we start to measure that performance themselves. Speed of the process, identifying who's on first, who's doing what when in the process, how do we queue that up, what are the SLAs, so that we get this process to be more responsive to the customer. That's what all we've been talking about today is how do we get the customer in front of this whole process to make sure that we are addressing their needs and move from their request to get the loan closed and get the money in their hands. So remember, if we increase that on-base percentage, we're going to win those more opportunities and we're going to actually improve our overall profitability. So once we define that, that kind of sets the stage of what is the potential financial benefit that we're going to see with the implementation of an LOS after we've changed the products, or changed the processes, practices, roles, responsibility. Then we have to start understanding what's going to be the overall effort related to making this transformation as it relates to commercial lending. And it is a big effort. Not only once we get the platform implemented, we still have a lot of data to convert. And the new gen folks are very talented people, but they cannot convert stuff that's captured in Word documents and multiple types of Excel files and push that into the platform for you to use day one. You're going to have to convert that as you go through the first 6 to 12 months in production on the platform. And we have to set that expectation up front, so that no one is expecting that as soon as you go into production that suddenly everything is going to be puppy dogs and rainbows with this platform. We still have a lot of work to do here. So we're going to have to transform from those Word and Excel documents. We're going to have to move documents from those shared network folders either into our imaging platform or into the LOS itself. We may be able to convert the data from those ancillary platforms and push that into it itself. But we just have to realize that there is going to be a substantial effort initially when we are moving to this LOS platform. Once we have those two components set, then we can start creating the business case and setting the real realities of this. Number one is, as we create that future design of what we want our grand estate to look like once we're all done and what's going to be the achievable performance improvement, we've got to make sure, number one, that it is scalable and repeatable. I know this may sound like an obvious statement, but we have to remember that we still have a bunch of different regions that we may be dealing with, and each one of them wants to be treated differently. The reality is we can't have there be that many different ways of doing a commercial loan and processing that approval. We'll have nuances. Obviously, we have different type of analysis that we'll do for a commercial real estate loan versus a C&I type loan. But the overall process itself is that we can't have a totally different team construct over in Region A versus the team that we're going to have in Region B. So we drive consistency, scalability, and repeatability within the process in the future state. We have to realize that if this is the first time we're implementing, we've got to think of this as a 3 to 5 year time horizon. If you're saying that year one, we're going to drive significant benefit in the organization, remember what we talked about with the effort in the previous slide, is that we got a lot of work to do even after we're in production itself. So a 3 to 5 year time horizon. First year, if we have any positive benefits, great. If we tread water, fine. No worries with that. And then year 3 is where we expect to see that the traction is really, we've gained a lot of traction with the platform, and now we're starting to scale the benefit up significantly. If we try to put this into a graphical representation here, you look on the side there, you can see once we hit year 3, we start to see that the overall benefit continues to escalate. I show the cost of the platform staying flat because, you know, they'll just charge you one price for infinite, and we don't have to worry about any kind of escalation in license fees, et cetera. But I joke. But once we've defined that business plan, we've set the expectations, we know what we want that future state to look like, we will see a much smoother implementation. Vendors like NewGen love it when you know what you want and we just simply tweak things versus when they come in and say, all right, now we're going to set it up, how do you want it to look? And you're like, I want it to look like what we had before. No, that's not the way it's going to work. We'll see that once we've clearly communicated what the future state's going to look like, that grand estate, what we can ultimately achieve, we should be seeing greater adoption at production when we roll this out. And because we've familiarized senior management with the expectations, what the future benefit's going to be, and those clear expectations, we should see good support and commitment from senior management to kind of maintain the fortitude we need to make it through that first 12 months and then generate that performance improvement, getting our higher on-base percentage. So, Cornerstone likes to end the stories with the so what. Great bunch of information, but so what? What does that mean for us? Well, as you can see here, there's no point in delaying. We do need to start our journey, as Ashley talked about, we've got to start this now. Okay, so right now is the time that we start designing how we're going to move towards being future ready. Any delays, and all we're doing is let the competition gain a further advantage to us. Figure out what your performance improvement is going to be. What is that metric that you can key in on and determine what's going to be the overall benefit to your organization to drive the ability for you to implement this platform. And then based upon that performance improvement that you have to achieve, design that ideal future state. Design your grand estate that you want to build and use that for you defining what LOS you want to use and implement like a NewGen platform. So, time to become future ready. All right. Thank you.